Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Minchandani. Well, Indian equities look set for a cautious start after previous session sharp gains out there. SGX Nifty indicates a mildly negative start coming in for Indian equities. US stocks paused on Monday as investors shift their focus to key inflation reading later this week. Asia Pacific markets traded mixed ahead of China's April data and US inflation reports later in the week out there. In terms of the direction from the FIIs, they've bought shares to a tune of around 2,123 odd crore. And if we talk about the DIIs, they've too been, they've been buyers and purchased shares to an extent of around 245 odd crore. Well, Mankind Pharma, the new kid on the block, is likely to list today. So do keep an eye out on that one. It's likely to list today with a double-digit premium. And in terms of bunch of companies that we keep a close eye out on will be Lupin, Apollo Tyres, Westlife, Raymond's, Nazara Tech. These are all going to be in focus as the companies will announce their fourth quarter earnings today. Well, let's get going and discuss some stock and strategies today with Sudeep Shah, the Deputy Vice President, Head of Technical and Derivative Research at SBI Securities out there. Good morning.
Good morning, Nikki.
All right, what are you reading into the markets? Look like bulls just are back after a day of pause out there. The momentum continues to be pretty bullish. 18,200 level is pretty much comfortably. Nifty is sitting past that level. What do you think will be the next key resistance level for Nifty and your strategy right now to the viewers out there?
Yeah. So what's happening with the markets is last week we have seen a one side move till 18,250, 18,300. And then we saw a knee-jerk reaction on the downside on Friday. Whatever the news were of the HDFC twins regarding the MSCI rebalancing, and we saw a 1,000-point cut in Bank Nifty. But let's understand what had happened prior to that. That Bank Nifty was the most outperforming index, and it had reached say above 43,000 levels. So there was some correction that was required at that time. And it was just that the HDFC news had come at that time, and there was a profit booking from higher levels. But if we see, Bank Nifty has been the most strong index out of two because IT index within the Nifty fold has not been performing. So I feel Bank Nifty will still continue to do better. And if IT starts performing, then we could see Nifty also participating in the rally. So if we talk about levels, now 18,150, 18,170 will be the most important support, because remember where we have reached now is 18,200. 18,200 is the level where we were somewhere around 6-7 months earlier, around in October, November, December, and in January also 18,200 was the high, and post that in 3 times 18,200, 18,250 levels acted as a resistance. And yesterday we have managed to close above that. So we have managed to close above all resistances, and now that is the reason. In case of any early morning profit booking or some kind of a softer open, 18,150 will now act as a very important support until we hold above 18,150, 18,200 kind of levels. I feel 18,430, 18,470 will be the next resistances, and the markets are still bullish, and I feel buy on dips should be the way going forward.
18,430 and 18,470, just the numbers, the sound of the numbers look so, attractive at this point of time. Of course, we're being too bullish out there, but remains to be seen if we can defy the global cues yet again. But your strategy coming in on Bank Nifty index, like you rightly pointed out that, it's been resilient of the lot, actually has been an outperformer. In yesterday's session too, it was up with gains of around 1.5%. 43,200 level odd past that level. What's the next immediate support level for this one, and scaling up the optimism that we have? Otherwise, what's going to be the next resistance level for Bank Nifty index out there, Sudeep?
The next, important is that first we need to see what is the underlying trend. The underlying trend is buy on dips. It has been outperformer, so every dip will be acting as a buying opportunity. Now, what the data is suggesting is that there's a lot of put writing happening in 43,000 strikes, 43, 100 and 200 strikes. I have also seen some put writing yesterday. So I feel going forward now, 43,000 zone will act as a strong support. Until this zone holds, an up move up to 44,000, which is the previous highs, lifetime highs in Bank Nifty could be seen. So it will be a buy on dips mode, and 43,000 zone will act as a very important support. And I feel a day or two, we are just a day or two away, and HDFC Bank also will start outperforming from here on, because Kotak Bank, ICICI Bank, both have been outperformers in the last few days. We have seen a pickup in Axis Bank also. And now it is only HDFC Bank that is remaining. So that if that starts firing, then it will be like Bank Nifty will be firing on all cylinders, and we could see levels past 44,000 also in the next few sessions.
Sure, you're stating some amount of participation coming in from HDFC Bank out there. That's probably one of the parameters that we like to watch out for. But apart from that, your 3 profitable bets this morning before we address the stocks and news.
Absolutely. So, while we are bullish on Bank Nifty, within that, apart from the large cap banks, we are bullish on few some mid-sized private sector banks. Then one of them is IDFC First Bank. Now, this stock has given us a symmetrical triangle breakout. It has now sustained above 62, 63 levels, which was falling, which was acting as a falling trend line resistance, and now and that resistance had been broken out with a very good set of numbers. The fundamentals are also in place here, and the last few days we have seen a good amount of accumulation between 62 and 63 levels, and now we feel that the stock is ready for a breakout on the upside, with all moving averages also supportive of the up move. So 62.50 will be the stop loss for this trade, and I feel upside up to 69.70 could be witnessed in IDFC First Bank. My second pick would be Coromandel. Now, Coromandel, we've seen a good amount of buying in fertilizer stocks in the last few sessions, and this stock has sustained above its 200 DMA for over 3-4 days with a good volume and a rise in open interest. Also, the stock has been now, it has managed to close above its December swing highs. So I feel it's a decent consolidation and a breakout post that. So 955 will be the stop loss, and we could see higher levels up to 1020, 1025 in this. The third pick would be Dalmia Bharat. We've seen a good amount of accumulation and buying yesterday in the cement stocks now, with crude prices falling. Also, a few of the cement inputs, the raw materials also now, the prices of that falling. It is a very good positive scenario for cement stocks, and Dalmia Bharat has been an outperformer in the last few months. While Ultratech, Ambuja Cement all have performed, Dalmia Bharat has been a steady outperformer, and yesterday we have seen a breakout with volumes, and it has with that it has managed to close above its 19th April swing high of 2078. So I feel from the current levels, the stock could move up to 2150, 2170, and one could keep a stop loss of 2045 for the same.
All right, so 2150, 2170 is the view coming in on Dalmia Bharat, IDFC and Coromandel. These are the 3 bets that Sudeep has suggested this morning. But let's address top movers of the day. In bunch of the stocks that we'll be addressing include Kansai Nerolac, Mahanagar Gas, Birlasoft, UPL, and in small cap something like Andhra Paper and Ugar Sugar. These are also ones that we're going to be discussing out in the morning out there. But I'm going to address in the new kid on the block today, the Mankind Pharma. Now, Macquarie, it's going to be listing in today, and Macquarie has already come up with a report and initiated an outperform rating on this one. Target price of around 1,400. That's the listing date. That's the target price that Macquarie is looking at. It says that the chronic focus to drive meaningful growth and margin expansion. Overall, Mankind Pharma has a net cash of around 2.8 billion rupees as of December 2022. However, in terms of risk, failure to gain market share in chronic, regulatory changes in IPM, and further stake sale by PE investors, that could weigh down on the performance of the company. So do keep an eye out on Mankind Pharma and the new listing that will come through today. Kansai Nerolac there. Well, what Morgan Stanley has to say, it has maintained the underweight rating, speaks about the margin miss being on account of higher expenses. But if I'm just supposed to read into the numbers first for you, revenue is up by 13% for this one, and the number is coming at 1,733 odd crore. Street was working with an estimate of around 1,719 odd crore. EBITDA up by 100% for this one and at a number of 168 crore. Street was estimating with a number of around 193 crore. So you can see that, probably outperformance coming in as compared to at least the Bloomberg estimates per se. That's the consensus estimates per se that we have. In terms of the margin, 9.7% as compared to 5.46% in the corresponding quarter of the previous year. And net profitability, that's more than 250% out there. So that's the number coming in for Kansai out there. But Mahanagar Gas, that's another one on our list that we have. Revenue is up by 49% on this one. And if you talk about the EBITDA performance, is up by 80%. Margins have come in at 22% as compared to 18% and net profitability, the bottom line performance, it's up more than 100% out there for even that one. 268 crore as compared to the estimates of around 206 crore. Birlasoft, amazing set of numbers out there. Sequentially, if you talk about revenue, okay, flat revenue or growth out there. But if you talk about the EBIT performance at 146 crore as compared to an EBIT loss of around 136 crore. So Birlasoft is something that we like to keep an eye out on. Of course, we have a bunch of other names coming in, but we're going to be addressing in the market opening for you and talk about UPL review, which seems to have missed at least Jeffrey's estimates coming in due to sharp OPM decline, EBITDA dragged, which is by decline in post-patent product prices out there. But let's actually get going on the market opening first for you and then probably talk about the other small cap performers that we have out there on the list. Andhra and Ugar Sugar, the two ones that we're going to be addressing in. But let's talk about Nifty 50 first. 18,300 level has been sustained and with gains of around 0.25% out there. So yet another session, a positive session coming in. We were expecting a cautious start coming in for the markets, but slew of earnings seem to have overweight the kind of performance that is coming in from the globe, completely disregarding that. Having a mind of its own, bull continue to dictate that momentum and the trend for the markets out there. Let's talk about the Bank Nifty index out there. It's been more bullish than what Nifty has been holding up. And today's session, no different out there for Bank Nifty index. Gains coming into an extent of 0.5% out for this one. 43,400 mark. That's the one which is comfortably sitting around that level. Remains to be seen if we can easily scale past to the 44,000, 45,000 level out there coming in for Bank Nifty index overall. So that's the one that we're going to be looking at in terms of the mid cap and the small cap performers that we have on the list before we address in the sectoral indices out there. Nifty mid cap, gains of around 0.5% out that one. And if we talk about the small cap index, that index too is sitting with gains of 0.5% out on that one. In terms of the other sectoral indices that we have on our list this morning, if we talk about the IT index, it's holding the neck in green with gains of around 0.1% out there. Slender gains coming in for Nifty IT. But metal index overall too has been shaping up well with gains of around 0.3% out there. And if we talk about the other index, auto index too, gains of close to 0.5% coming in for Nifty auto index. In terms of the pharma index, that's too up, but with slender gains. Overall, IT as well as pharma, they're seeing the positive momentum, but that's really not as bullish as we're seeing for auto, for realty, and something like even the Bank Nifty for that matter. So rate sensitives at this point of time have been holding up, and that's probably the trend which continues to play out for you. FMCG, 0.2% of gains coming in on that one. And if we talk about the Nifty Realty Index, just to see how is that stacking up for you, just to have a flavor of that index. Okay, more than 0.5% out there. So clearly it's the rate sensitives which have outperformed the defensive packs out there. And if you talk about the market breadth out there, 41 advances versus 9 declines coming in. So market breadth right now is skewed in the favor of advances. But let's actually address in the top gainers and the top losers out there for you. Adani Enterprises and IndusInd Bank, that's shining in green for you for yet another session out there. Bajaj Finserv too is one of the top gainers that we have on our list right now. M&M, Britannia and Tata Steel. These are some of the other names that we have. So a bunch of FMCG and the auto names along with metal. So that's the one trend playing out. Titan and Maruti Suzuki Eicher Motors, clearly Autopack is dominating the trend right now when it comes to the top gainers that we have on our list. If you talk about the losers out there, UPL, HCL Technologies, Hindalco, and something in the likes of other top losers that we have on the screen right now, BPCL, Sun Pharma, and Infosys. This is, these are some of the top losers. But let's actually also look in at the chart coming in for Birlasoft, because, it's reported that EBIT level profit as compared to the EBIT loss sequentially at least, so that remains to be seen. Birlasoft is the one that we're going to be talking about because the numbers have been exceptionally well. Kansai Nerolac, again, that's going to be the second one that we'd like to look at given the kind of performance that we've seen coming in from Kansai out there. So it's a mixed bag out there coming in for both of these companies, but Birlasoft first for you on the screen. Kansai is trading with gains of around more than 7.5% out there. For Jefferies, probably it was mixed bag, but for us, like we indicated, operational performance has been splendid coming in for Kansai Nerolac out there. If you talk about Birlasoft, now that's another one that we have on our list right now that needs to be addressed, right? Because the numbers were to an extent of EBIT profit as compared to the EBIT loss sequentially that we've seen for that one. And that's also holding up with gains of around 3% even on that one. Other few counters that I'd really like to address this morning, it's been more or less good set of performance coming in from Ugar Sugar out there. If you talk about the revenue, it's up by 67% out there. The gains are to an extent of 4% on your screen. Revenue up by 67%. EBITDA, it's up by 267%, and the margins have come in at 17% as compared to 8% in the corresponding quarter of the previous year. Profitability, that's up more than 300% coming in that one. So that's Ugar Sugar for you, shining in green. Andhra Paper, that's again a good one. Good set of numbers reported by the company right there. Revenue up by 38% for this one. EBITDA more than 150% jump out there. Margin at 38% as compared to 19%. And also let's talk about the profitability. It's more than 160% out there for that one. So these are some of the small cap names that we have on our list right now. But what remains to be interesting will be Mankind Pharma. It's likely to list today. Double-digit premium is expected. Lupin, Apollo Tyres, Nazara Tech, that is also expected to be in focus. But Sudeep, coming on this one, I would want to understand from you, what are you making out for Bajaj Finserv and IndusInd Bank? These are some of the top gainers that we have on our list. I'd be more keen for IndusInd Bank because it's for the second consecutive session after the clarification has come in when it comes to the reject coming in from the management level. What do you make out of it?
Nikki, if we see IndusInd Bank, it has actually underperformed the broader Bank Nifty index as well as the Nifty index, and it has been trading in this range of 1,030-40 on the downside and 1130-50 on the upside. And again, whenever it is approaching the higher levels of 1150, there is always some 1155, 1160. There is always some selling pressure from higher levels. So I would like to watch out for this crossover of 1160 and then only take a bullish view on that, because till then it will be in a range. And right now also, as we are speaking, the stock is just hovering around its 200 DMA, which is around 1130-35 levels. So it is a sticky place here. And if we want to buy it with conviction, then above 1165 would be the level that one has to keep an eye for, because above 1165 it could straight away head for 1220. And once 1165 is taken out, then the stop loss would be 1130 for the same.
Sudeep, you were expecting some amount of profit booking to kickstart in the early session of, probably the opening level or maybe 1 hour after markets settle. At this point of time, what do you read in? Because we're seeing some more amount of gains coming in for the markets. Bulls clearly seem to dominate and dictate the trend right now. Would you like to revise your call out there, or you still believe with the conviction that you're working with, the street would witness some amount of profit booking, and 18,150 to 18,170, if I'm not wrong, that's the immediate support level that you suggested, right?
See, what I mean is that the trend is bullish right now. And in case we see, because since we are at higher levels around 18,300, and there is some significant call writing already there at 18,300 strike prices. So what could happen is that initially post this opening, we could see some kind of a range bound movement with consolidation between this 18,250 kind of levels around that. But in case of any major profit booking or any kind of early modeling slide, it would get arrested around 18,150, 18,180 kind of zone, because there is significant put writing happening in 18,200 strikes. And now with weekly expiry just a couple of days away, this 18,150, 18,200 zone will be a sticky support, and it might not get broken easily. So any long positions, whether in stocks or indices, we should be using this 18,150 levels as a trailing stop loss for the same, and the upside potential remains up to 18,470, 18,500.
Right, Sudeep, we'll leave it at that. Thank you so much for taking out the time and speaking to us.
Thank
Right, at that part of the day where we address the fundamental story out there for you, and there's lots to talk about the performance of auto sector, talk about the performance of banking sector. And to join to take the discussion forward is Srinivas Rao, PGIM CIO, International Business out there. Good morning there.
Good morning, Nikki.
All right, my first question, of course, with you would be about the banking sector overall. Within the earnings that have been reported thus far, how are you reading into PSU Bank's number? They've been decent enough. And something like private sector bank, ICICI Bank did splendid on all counts. But what stood out for you within the PSU basket right now, and how are the valuations stacking up for the space?
So, Nikki, I think overall financial sector, banking has done extremely well. I think has been the savior for this quarter also in terms of earnings numbers that we have seen. The beat that we are seeing in numbers overall are about 10% growth for the Nifty companies that have declared results so far is essentially driven by the banking sector. Within that, yes, PSUs also have done extremely well. That's why we've been positive, constructive on the financial space and remain so even today. One hand, you have this solid earnings growth. The credit cycle is, 3 years back we were at the peak, and now we are still very, very comfortable space in terms of where are we on credit cycle. And valuations, you mentioned about valuations. There are now 2 spectrum. In the past, there used to be 3 spectrums. One is the super expensive 2 banks, and the rest of the bank in private sector, and then PSUs. Now, I would say we are more or less in the 2 baskets. The large, fairly well-known companies that have fantastic track record at trading at a particular 2.4 times price to book, and then you have rest in the closer to 1 time, 1.2 times price to book. So I think this kind of a discount is likely to continue for some more time for the valid reasons. When you look at the overall capital allocation and the governance levels of a private sector versus a PSU sector and the return ratios, I think except the, let's say, top 2 PSU banks, the rest I would say are more of a tactical place. Whereas the other private sector banks for me are more a structural play on India story. So to that extent, I continue to remain more positive on the private sector banks within PSU, but I think right now there is a tactical play that's on.
Sure. Let's also talk about the paint companies out there. Something like we've seen good numbers coming out from that one. Your assessment overall on the space, if you look at it closely, that is one. And overall, your reading on FMCG basket, because most of these companies have now reported in numbers. There were fears of El Nino, subpar monsoon coming in. But to most of the surprise, be it Britannia, be it talk about Nestle, talk about the, most of the counterparts have really reported steady set of numbers. How are you reading into the space?
Yeah, I think results were better than expected, Nikki, but at the same time, if you see the volume growth across, it is in lower single digits for quite a few companies, and that is clearly a concern. And the commentary that you hear from these companies is also suggesting that they're a bit worried about the near-term outlook on terms of volume growth. So I think there is clear concern on the likely impact inflation and the overall pressure on incomes will have on the consumption space in the near term. I think that seems something that we need to watch very, very closely. Also, this El Nino or the concern on the monsoon, I think it is, to me, it looks like more like a certain that we are headed to a relatively poor monsoon season. I mean, we are in the month of May. We've seen across the country, unseasonal rains, temperatures dropping dramatically. All of them indicate that the monsoon is going to be a big challenge for us in the near term. So to that extent, I would be very cautious on the consumption names, given the fact that most of them trade at a fairly expensive valuation versus their own averages and the broader market. Broader market is trading at 19, 20 times. Most of these names are at 40, 50 times price to earnings. So to that extent, I think one need to be cautious on these names, Nikki.
Sure. So some amount of cautious undertone coming in terms of the FMCG basket, given the kind of volume growth that they have reported thus far, which actually puts a question mark overall on the demand scenario stacking up for this one. But that's clearly the word coming in overall for the FMCG. Auto basket and the rate sensitives per se, that they have an upper hand as compared to the defensive, right? For the past couple of days, we've seen that trend actually playing out. In today's session, it's no different. You're also seeing Autopack doing extremely well in trade today. The numbers have been good enough in terms of the monthly performance, in terms of the quarterly update out there. How are the valuations looking right now? And do you think this is still an attractive space to enter into?
I would say auto still looks reasonable. I will not call it super attractive at this point of time, given the fact that though numbers have been decent, but I think there are clear signs of slowdown in the passenger car volume. So I think that's something that one needs to watch out. I think we had a fantastic 18-month period where most of these companies enjoyed a very, very healthy backlog in terms of 3 months to 6 months waiting period for the new cars. And from that, I think what the numbers that we are seeing in the last few weeks suggest there is a bit of a tiredness and softness in the volumes. But I think autos, I will still be more constructive because of the structural story that is there. I think in terms of aspiration levels, I think today virtually every middle class Indian wants to aspire to own a car. And compared to that, where we are, I think there is a long way to go, and the market is relatively consolidated. So to that extent, the medium to long-term drivers are in place. And even, let's say, we are assuming that whether it is the interest rate, looks like we've already hit at a peak or we are close to peak. So looking at that aspect and things getting better maybe from October onwards, I think makes sense to be a little positive on autos at this point of time, Nikki.
Okay, so finally some amount of optimism creeping in for the auto basket overall, but I'm just going to check with you, what is the space that you're really interested in right now, because you've sent some amount of caution on FMCG. You weren't really that bullish even on auto. For financials, you preferred private sector banking. How about the new age companies? Something like a Paytm, I'm sure you're going to say that it's going to be a different model and probably one of the sector again that you would probably scale past through. But within the pockets, what do you like at this point of time?
So I'm saying my first preference is financials. It also has a fairly large weight in the market. So we are overweight on financials. And the next big overweight for me is the actually pharma sector. So we are clearly seeing US markets turning more favorable versus what we saw in the last few months. So that's a good thing for pharma. And valuations are reasonable. So I think
be coming in with the numbers today. Lupin is going to be coming in with numbers today. What are you expecting out of Lupin, and in the pecking order that you can suggest within the pharma space, if you can put names out there?
Nikki, we don't comment on stock-specific names.
Sure, I get it. But in terms of earnings, I would not ask you whether you're expecting some amount of bullishness coming in from that company. But what's your pecking order in terms of the overall large cap names, given their style of business and the valuations that they command at this point of time?
See, we continue to like the top three names in the pharma, domestic pharma. I think these companies have done a fantastic job of, they've started as a manufacturing outsourcing. From there, they've clearly built fantastic R&D capabilities over a period of time and gained reasonable market share in a country like US. So I think we like large cap domestic names from given what they have achieved and what is the outlook ahead. So I like the top three pharma names, Nikki, in the country.
All right, if you're talking about the market capitalization and the top sales, that's where the momentum lies. But Mankind Pharma, do you have a view on that one? It's going to be listing in today. Probably double-digit premium is expected on that one. Do you like the business? Before you could give your view, do you like the business model of the company? Let's just put it that way.
We like pharma business model. Pharma sector per se is in a fairly secular growth story. So to that extent, we are positive on the sector. But again, I'm not getting into company specific, Nikki.
All right, so we'll leave it at that. Thank you so much for taking out the time and speaking to us. Well, it was a hard catch there. We couldn't really get much out of it, but top three companies in terms of the market capitalization, the top sales is what the preference is in terms of the pharma sector out there. Do keep an eye out on the new kid on the block, which is Mankind Pharma. That's going to be stealing in all the limelight in bunch of earnings. Also, do keep an eye out on Lupin. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Money Control app.